Thank you very much. So now I have the pleasure to introduce you to our first speaker of the Third Asia Finance Forum to deliver his welcome address. So may I introduce you to the Vice President for Knowledge Management and Sustainable Development here at the Asian Development Bank. Please give a big welcome to Pak Bambang Sukotono.
Thank you, Josh. Good morning, colleagues, distinguished guests, ladies and gentlemen, and thank you for joining us to this third annual Asia Finance Forum. Special thanks also go to our important partners in this forum, the government of Luxembourg and also ADB Institute. I extend special gratitude to all of you who have traveled to join us here in our HQ in Manila. Most of you here, policymakers, financial sector regulators, financial institutions, fintech companies, and academia from around the world would agree that we are in an era of remarkable technological advances. There is an enormous opportunity to develop the financial services industry to reach some 1.7 billion people who remain unbanked. Many of them are here in Asia and Pacific region. We aim in this conference to build the capabilities of developing member countries and help prepare them for the wave of the new digital technology that are emerging in financial services. There are many technological advances which have the potential to efficiently address long-standing obstacles and make real progress in expanding financial access. They include technology supplies in the context of regulatory sandboxes for testing financial innovations, distributed-ledger technology such as blockchain, and digital ID establishment through the use of biometrics. Yet, we must also be aware of the potential risks these new technologies bring. According to Financial Stability Board, for example, risks from financial sources may include maturity mismatches, liquidity mismatches, and excess leverage. Operational risks may encompass, among others, cybersecurity, legal and regulatory challenges, and anti-money laundering or terrorist financing. There are other system-wide vulnerabilities that can amplify shocks to the entire financial system. These risks are largely related to interactions between firms, investors, and clients that create important transmission channels and increase the likelihood of financial instability across the economy. Indeed, failure to prepare for either the benefits or the risks could mean that poor and marginalized community would likely be left even further behind as technology marches forward. It is important to strike a balance between pursuing benefit and mitigating potential risks while creating an environment that embraces creativity and also innovations. In keeping with the goals of our Strategy 2030, the Asian Development Bank is experimenting with leading-edge initiatives to apply digital technology, especially in the finance sector. The overarching aim is to efficiently increase access to finance for all, including the marginalized. For example, yesterday ADB conducted one of our hackathon challenges that aim to provide fintech solutions to address the needs of the agriculture sector. The Hackathon Challenge is a series of activities to which we invite the startup community to submit ag-tech and fintech solutions that may potentially be piloted as operational projects in one of our developing member countries. We observe very creative and savvy solutions from blockchain for livestock management to the use of GIS, the Geographic Information System, for the crop insurance. If these solutions are deemed successful, farmers who represent a high share in the unbanked populations can start gaining greater access to financial tools, thereby gaining more economic empowerment. Indeed, ADB has been working on expanding innovative financial services through our projects and technical assistance as well. The first example is from Bangladesh. We completed last year a weather index-based crop insurance pilot in 3 districts involving over 9,500 smallholder rice farmers. Crop insurance is particularly valuable today when the effects of climate change are making farming more unpredictable. It can be called a climate adaptation tool as it offers farmers the capacity to plan and put aside some money to cope with difficult times when harvests are suddenly damaged or destroyed. Crop insurance also allows farmers to invest in modern technology that lifts productivity and also incomes. This $2 million grant project featured innovative components that include, first, the use of mobile banking services for the collection of insurance premiums and payment of claims. Second, development of parametric weather index for claims settlement without on-the-spot assessment of crop damages following excess or deficit rainfall. And the third, the installation of automated weather stations for providing climate-related information. The second example is from here in the Philippines. Some of you have probably heard of our support to Kantilan Bank's launch of cloud-based core banking services. In coordination with the Philippine Central Bank, Kantilan piloted cloud technology testing in its regulatory sandbox. Kantilan Bank's core banking system was recently fully migrated to the cloud and has won several awards, including Digital Trailblazer for Financial Services Award from the Banco Central Filipinas and finalists for Outstanding Partner for Digital Transformations. Cloud technology for core banking brings immense value to financial institutions such as Kantilan Bank. With this capability, the bank can now reach the underserved and unbanked in a more efficient manner through their mobile and tablet solutions. It can offer the clients new opportunities to save funds, make payments, get a small business loan, send remittances, or buy insurance. It provides personalized and efficient services even in remote locations, and it can mitigate various IT strategic and operational risks and reduce major IT capital expenses. Kantilan Bank is the first bank in the Philippines to use high-level technology in this way. Allow me to give one more ADB project example of digital technology application, and this one is from Papua New Guinea, a country where some 85% of the low-income population reportedly has no access to formal financial services. This project, Digital Access through Biometric ID, is supporting the country's Mi Bank and Women's Microbank provide financial services to low-income and financially underserved people in the remote areas. The biometric ID will allow people to verify personal attributes such as name, gender, and biometrics, and thus access financial services safely and securely. This will aid considerably in establishing Know Your Customer information, KYC, which we all know is critical to assessing financial services. The tool will use smart cards on standard Android mobile phones, and this smart card-based digital access tool works without power and internet, which is important for reaching unbanked people in the remotest locations. The overall aim of the project is to make those people become more visible, more bankable, and have a better chance to move out from poverty. Distinguished guests, colleagues, ladies and gentlemen, our program today and tomorrow is an opportunity to explore together what more we can do and what more we must do to further the financial inclusion agenda by leveraging new technology. And we want to get down to the specific of how the poor and the unbanked, including women and small businesses, can be empowered through adoption of new technology in the finance sector. At the same time, we also need to ensure that information security, data, consumer protection, and financial stability are at the center of the preparation for digital financial services. The need to harness the power of technology is also attributed to the fact that financial markets in Asia and Pacific are becoming increasingly interconnected with global and regional financial markets. Digital technology will further speed up the potential spread of contagion between markets, and time is right, therefore, to take quick and innovative policy measures to increase the potential for positive cross-border spillover and guard against unintended consequences. This brings me to stress how important it is for an event like this forum to bring experts and policymakers together and contribute to regional knowledge-sharing efforts and policy dialogues to address challenges of fintech's operations. I would like to highlight in this regard that ADB has been contributing to this important dialogue and knowledge-sharing by conducting research and publishing policy papers ranging from country-specific analysis to broader sector reports. For example, we have published this year Pacific Finance Sector Brief for each country in the Pacific region. We are also increasing the number of working papers and reports, not only broadly on the finance sector and financial inclusion, but more specifically on fintechs in Asia and the Pacific. All of these reports are available online from our ADB website, www.adb.org. So, distinguished guests, colleagues, ladies and gentlemen, the third Asia Finance Forum is an exciting opportunity to advance our understanding on this new technology. I would like to conclude my remarks with ADB's commitment to continue supporting our member countries to tap full potential of digital technologies so our children can enjoy productive and safe digital life. No one should be left behind in this digital economy. Thank you, and I wish you all have a fruitful day.
Thank you. Thank you. Thank you very much, Pak Bambang, for these remarks. And we are going straight into our keynote, so to set the scene, so to say. And we are very happy that we managed to get a very experienced strategist and expert on payments here to the ADB this morning. She's actually the Executive Vice President for Digital and Emerging Partnerships and New Payment Flows for the Asia Pacific at MasterCard. I think she comes all the way from Singapore, if I'm not mistaken. So please give a warm welcome to Rama Sridhar.
Good morning. It's wonderful to go first thing in the morning after the welcome address. Normally I kind of get to speak post-lunch and I'm trying to figure out humor. I will skip that part today because we're all fresh and charged up with coffee. I'm here and, working in an organization like MasterCard, it would be appropriate skepticism if many of you were thinking but not saying, what is she going to talk about? What does she even know about development? Right? I just happen to be fortunate. I happen to be born in an era before anything digital ever happened, right? And I also happen to be born in a country which quite frankly has been and continues to struggle with development, and although the rhetoric from India is very strong today, that was not the case when I was born many decades back. So, and again, I'm even more fortunate that I work in a space which is digital, and I'm able to see the transition from where I came to where the world can head to, and hopefully that perspective of both professional and personal experience gives me some right to stand here and talk about what I see and how I see the world. With that, we always say that these days, right, the contemporary speeches, it is the age of the fourth industrial revolution. And it's an era, in words of somebody, that builds and extends the impact of digitization in new and unanticipated ways. But that, like Park said, is not the case for hundreds of millions of people, most of whom are poor and most of whom live in this part of the world, the developing world. The disruptive and the transformative advances in technology, education, health, and finance that are available in our lives is not available in theirs. They don't experience any of it. So these advances, as we have seen, have created new industries, reshaped old ones, impacted and transformed large chunks of our society. However, and it's a big however, this digital revolution, I dare say, will not ensure automatic access to finance for all. So I'm taking a slightly extreme position on this, because I do believe that many things need to happen if you want to get to that place. So today I will talk about 4 things. The first one, which we loosely talk about, the ICT sector. The ICT sector and its significance in the context of this conversation. The building blocks, some of which were referred to in the welcome note as well, that will achieve the targeted outcome. Again, we speak about all population as one universe. I have a different opinion. I will talk about target population pools and what their needs could be. And lastly, if we actually did everything that we have to, what is in it for us? I come from the commercial world, and we cannot complete a conversation without numbers. So let's talk about that as well, right? Let's start with the first part, the ICT sector. The ICT sector, we believe, is particularly important. It contributes 5 to 10% of the GDP of many developed countries. And it's even more important in the middle income countries where ICT ranks in the top 3 industries. But that's just a part of the story. The impact of the ICT sector is relatively small compared to the benefits when technology is adopted across the economy. But achieving an economy-wide digital transformation is difficult because it's not just about building a thriving ICT sector. It is actually about driving digitization across the society. If you look at this slide, let's consider 3 countries, right? The US, Vietnam, and India. I picked this for obvious reasons. The ICT sector accounts only for about 8% of US GDP. At the same time, that country has embraced digitization and it ranks 15th in the world in ICT adoption and 8th in nominal GDP per capita. Contrast that with the US and India and Vietnam. Vietnam is a global workshop for ICT goods and services. ICT makes up 40% of Vietnam's GDP, and hardware manufacturing alone accounts for $1 in $3 in the Vietnam economy. Yet, it ranks 131 in nominal GDP per capita. And while Vietnam has succeeded in developing a thriving ICT sector, it has not yet embraced a digital economy. Vietnam ranks 108 in the UN's ICT Development Index, which measures internet access, users, and skills. So if Vietnam were to embrace digitization in full flow, it could generate, according to some estimates, $100 billion in incremental wealth over the next 20 odd years. In India, the story is very similar. India is world's second largest exporter of ICT, yet it ranked 121 in GDP per capita and 138 in Internet Development Index. So the digitization of the Indian economy could have an incredible impact on the country. And they've already started this process with the issuance of the Aadhaar identification card, similar to the biometric digital identity that Park referred to in his welcome note, right? And a report from McKinsey says India could generate $1 trillion of incremental growth by 2025, thanks to the initiatives of digitization that they've taken. So the relationship between internet adoption and economic success, but that's not unique to the US, Vietnam, or India. There is a direct correlation between a country's digital adoption and GDP per capita. And why is that? It's because of the gains in productivity and innovation that digitization unlocks. Countries which rank poorly in the UN's Internet Development Index also, coincidentally, have a low GDP per capita. And in Asia, we can see that very clearly. Most Asian countries fall very closely to the trend line. But I must caution you again, access to ICT is a necessary but not a sufficient condition to realizing these dividends. There is a need for much more. ICT adoption must be accompanied by many of the other facilitating factors we referred to briefly earlier, and I will talk a little more about it: trust, user identification, financial enablement, security, and a regulatory framework which enables growth. Let's see how these building blocks work. If I look at some commercial examples to illustrate this, right? Let's consider the development of email. Early web-based email such as Yahoo, which created so much value for all of us. It allowed people to work together more efficiently and communicate, but communicate with colleagues, friends, and family, i.e. people we knew. It also suffered from limitations exactly because of that. It didn't provide any tools to authenticate identities, or establish trust, or enable financial transactions. It only allowed communication between people you knew. So you couldn't trust strangers, you couldn't send money, and that's why MasterCard happened, M-Pesa happened, Bcash happened. There's just so much more innovation that happened because of a certain limitation. Other business models have struggled too, right? So eBay had a payment problem, and that's why they built PayPal as a way of creating trusted payments when people did not use credit cards with strangers. That, by the way, is still a problem in this region, and we'll refer to that a bit later. Uber, we all celebrate the ride sharing as an industry as if it's arrived. It has a famously frictionless payment experience, but it's still held back. It's held back by regulatory barriers and ongoing challenges of consumer trust. All of these innovations, whether it's Yahoo, eBay, or Uber, they exemplify digitization's capacity to increase the number and the quality of digital interactions. But that's not enough. I spoke about 4 parts: ICT, the building blocks that it takes, then the target population pool, right? So let's talk a little about the target population pools. The 1.7 billion population that lives largely in Asia and the Pacific, who are unbanked. Yes, that's an absolutely right starting point, right? But at MasterCard, we kind of look at it a bit more broadly. To those 1.7 billion people, we will add millions of micro, small, and medium-sized enterprises that are outside the system. I'll refer to this segment as the SMEs. And then there are billions of people who we all believe are in the formal banking and financial system, but they also need help to persuade them that going digital will not, is not scary, will not see them fall prey to issues like cybercrime, tracking, identity theft, all of those which are fears in the educated people and prevent them from getting there. So let's first look at the excluded, right? The first block, the 1.7 billion. What do we mean when we say they are outside the banking and financial system? It means they pay high fees. They trust risky systems for the simplest of transactions. They rely still on cash or even barter for necessities. And the scale of financial exclusion is really profound. So the World Bank research from 2017, it says 90% of people in India, Myanmar, Sri Lanka, Cambodia, and Laos have never used the internet to make a bill payment or shop online. That proportion is only slightly lower in Philippines and Indonesia. And while the digital portion of the economy in ASEAN and in Asia more broadly will rise in the coming years, we all are very clear that we will not reach the potential unless we solve for financial inclusion. But what does creating financial inclusion require? I believe there are 3 main barriers: a lack of access, an inability to make payments, and inadequate education and training. And all 3 need to be attended if this needs to be solved. This problem, all these 3 problems, particularly affect 2 subsegments: the elderly and the poor. If you look at this region, right, those numbers, those high numbers, are actually about people who have never used the internet. It's in 90s, right? In Japan, one of the economies that you may think is most ahead, less than 20% of people aged 55 and older have ever shopped online or even made a payment. In China, that number is just 5%. And in both countries, in both China and Japan, 3/4 of people under 35 have actually done so. So the point I'm making is the variances are not very different when we compare the richest 20% of the population and the poorest 20% of the population. Populations tend to behave similarly depending on the demographic class that they come from. So what's the solution? Greater ICT access, trust, and regulatory action is required to achieve 3 goals. First, reduce the socioeconomic barriers.